Good morning, everybody. It's Brian Caprice, and this is your Monday morning market breakdown. It's a very interesting week. We've already had some chatter. We've had some major gaps. We've had a little bit of retracement. Week starting off to be pretty interesting. Whenever the president, kind of drops bombs on, not literally drops bombs, but brings up large news headlines. During the weekend, or going right into the weekend, the currency market is the first market that gets to respond, and respond did it. It's also kind of a very exciting week because we got a lot of news this week. A lot of good news quality releases. I don't know if you guys were here last week, but every release that we mentioned, the 1, 2, and 3, were quite large movers last week and really nice trade setup. So if you're able to catch those, congratulations, those were good. I know I was able to get into them and my students did, so hopefully you guys took advantage of that. Before we get in, I actually can't see the list of the people that are here, so I'm not sure if you guys have been in or not. Just so you understand where I'm coming from, I'm an instructor at Major League Trading, and I also founded Major League Forex. I've been trading a long time, since 2000, really right around when the tech bubble was happening. And I actually live in the DC area, so I'm very familiar. And the tech bubble was very close to home for many people that I know. And over the years, I've done a number of different things, traded a number of different asset classes. I started off with stocks because everybody, I guess there's a law somewhere that says you have to start with stocks. But I learned stocks and options, and when I was young, I just didn't have the capital to really trade it, but I had a lot of knowledge, and I kind of branched out. Found currencies, fell in love with that. Had been trading options before. Last few years I found Nadex as well, and really just loved the idea of kind of how it was created and the ways to trade it. And I created a few different programs for people that are busy. 30-minute trader, as well as a 5-minute binary course. I'm a full, a stay-at-home dad. Trading and educating is my main, my main business. But that little girl in that picture right there is who I take care of all day long. So for me, as you can imagine, don't have tons of time. I'm not a trader that spends 18 hours in front of a computer. To me, that's not living. Living is spending time with my family, but I use trading to help get me there. So for me, I'm all about using technology and set and forget type trading, finding things in advance, doing good planning when I have free time, and then executing when I actually have the time to sit in front of a computer. So that's kind of what I do. I did work for the advisory division of one of the big three. Actually, they may be in the big two now. I don't like to bring up the name, but they're one of the big ones out there. They're actually most well known for mortgages. That gives you a little bit of a hint. Spent a little bit of time there, got up to being fully licensed and started, accumulating clients, and realized that it wasn't for me. Financial advisors really don't have any clue about the markets whatsoever. And the biggest problem is I knew how to trade the markets. And when I wanted to do things with my clients' money that would have worked out for them, we were not allowed to do anything. We had to put them in kind of we had to toe the line, and I didn't really like that at all. So I decided to branch out. I've been helping traders now for the last 8 years learn how to do it themselves. Travel to the U.S., Canada. That's where I met my wife. And again, when I'm not trading, when I'm not taking care of Jan, the little one, I'm basically coaching lacrosse for my two sons, the twin boys. So life is very, very busy for me. I love doing these presentations, so especially early in the morning before news releases. So hopefully you guys continue to join us through the next couple of weeks. All right. So as far as risk disclaimers go, please understand that trading on Nadex involves financial risk and may not be appropriate for all investors. The information presented here is for information and education purposes only and should not be considered an offer or solicitation to buy or sell any financial instrument on Nadex or elsewhere. Now, any trading decisions that you make, please understand that they are solely your responsibility. Past performance is not necessarily indicative of future results, and Nadex contracts are based on the underlying asset classes, including Forex, stock index futures, commodity futures, and economic events. Now, understand that trading can be volatile, and that's why we trade, and investors risk losing their investment on any given transaction. However, and this is very important to understand, the design of Nadex contracts ensures that investors cannot lose more than the cost to enter the trade. Basically, if you get into something and it costs you $34, the most you can lose on that trade is $34. There are no margin calls or anything like that. If you don't know what a margin call is, definitely go look that up after today's webinar. Now, Nadex is subject to U.S. regulatory oversight by the CFTC. Very important to understand. If you guys don't know what the CFTC is, go look to see who else they regulate. You'll see that they are definitely a large governing body, and Nadex is well within those borders. All right. So with that being said, this is the news releases from last week. I would just like to point those out. I in looking back, one of the things that one of my students commented on is that I should kind of remember, let people know what we did the week before, and then kind of going to the week forward. So last week, the three biggies were non-farm payroll, obviously large movement there. FOMC this last week was a big bang. Definitely got some big movement out of there as they switched back for us from dovish to hawkish, as well as the GDP inflation report and official bank rate. That was also a good one that you were able to snag some pips off of. Now, GDP is starting to come alive again. We were in a little bit of a Brexit hangover to where it was just moving so slow. And, you know, looks like it's starting to come back. And now let's roll into this week. And you can see this week, there's a little bit of GDP. And actually, the number one opportunity this week I have up here listed is going to be Friday early morning, depending on if you're East Coast or West Coast. But there's Great Britain GDP / manufacturing production at the open on Friday. So the reason I picked this one for number one this week is obviously U.S. traders are not in there, so the pound, particularly the pound dollar, will pretty much have easy access. Wherever the pound traders feel it, that thing needs to move, it's going to move. Manufacturing is always kind of a front runner of what the economy is going to look like. And interestingly enough, the U.S. data has been good, except for manufacturing this last time. When everybody was saying everything was bad and we were starting to see some bumps in the road for U.S. data, manufacturing is kind of what pulled us through, and we saw the overall market continue to rise, minus what the news was telling us, right? Now we're seeing all the other data good, and manufacturing in the U.S. is starting to slow, and we're starting to see some, the market start to react. So GDP is important for one because it's going to tell you about, basically the health grade of the pound, but then manufacturing is going to kind of foreshadow what's coming next. So that's why I think it's a pretty important release to grab. And again, that one's probably worth, depending on if you're going to use pound dollar or pound yen, anywhere from 40 to 60 pips, which can be, some nice movement, 2 or 3 strikes in Nadex pairs, depending on which ones you're doing. Next one would be Tuesday at, again, late, but it'd be the Aussie cash rate. So this week, the cash rate is expected to change. The interest rate is supposed to be dropped. Very, very important. Whenever any type of rates are changing, whether it be borrowing, overnight rates, that's big news. Aussie has had some great nighttime movement when there's been less traders out in the market. Now this one would be, again, if you're West Coaster, this one isn't too bad. Even East Coasters, this one is not horrible as far as time goes. But again, think about who's trading at the time, okay? You have the Asian session running at that point, and that's it. Okay, there's no US traders, there's no London traders. Aussie trades at night have been worth anywhere from 40 to 60 pips. The Aussie yen has been one of my favorite pairs to trade the last few weeks, followed very closely by the Aussie dollar. And again, it's because there's nobody else trading at the time, so you're getting this movement in there, and it's purely the market reacting. The large manipulators are not in the market at that time. So great opportunity to be able to trade the Aussie. That's why that's ranked as number 2. Oh, number 3. You know what? I can fix this slide as I'm talking. So number 3, it was actually a tie this week. Okay, you guys can probably see this, right? Retail. Oops, I got to spell it correctly. There we go. So there's actually 2 this week. On Friday we have CPI and then CAD unemployment news on Friday at 8:30. That is the most popular time for news during the week. I do feel like we'll get something this week. Unemployment has been a little bit interesting story for CAD, and I think that can potentially give us some good movement CAD based. And again, you pair this against the US dollar, but also number 2 would be CPI for the US. I think the consumer index, I think it's going to be, I think we're going to see a little bit of a movement this week that's a little bit different. It got pushed up last time, and I think that was good, but I'm kind of half expecting a bit of a revision, although now they're saying that core CPI is actually going to go up as well. So the combination of those 2 could lead to an interesting scenario. But I did put that closely, and again, you'll see there's a number 3 that's tied, would be Aussie retail sales tonight. Now, that retail sales tonight number is actually earlier. It's 9:30 p.m. Eastern time. Again, this is one of those nighttime releases. Retail sales has the ability to move some things. So again, it's very closely tied. I think I'm really torn between the 2. I didn't want to, overload this with Aussie trades at night, but I definitely think that, there is some potential there. Okay. Now, with that being said, let me kind of jump across over to the news. So for those of you that aren't familiar, Daily FX is one of the I'd say one of the best news sources out there. There's a lot of information, all kinds of things are going on. You're talking about critical spots in the yen, But what we want to do is go to dailyfx.com. We're going to go down to calendars and charts, go to economic calendar. And what we're going to do is we're going to change some things. First, you want to make sure it's filtered for your time zone, right? Right there. Gotta love daylight savings time. Let's remove low and Mexican peso, close it, and then go to weekly view. And this will kind of give you an overview of how we're looking for the week. As you guys can see, there's a CAD speech today, although I don't expect it to be too much. But you'll see these trade balances and then this retail sales number tonight. That's kind of what I'm looking for, is this retail sales number. Going into Tuesday, this is where you're going to see this bank rate, right? It was 1.5, and we're supposed to be going down to 1.25. So the market will, it's obviously already priced in, but look for a surprise. Sometimes you'll see a double rate cut. Maybe they won't hold it. Maybe the forecast is going to be wrong for this one, in which case we'll have a pretty large spike. But there's typically some movement around this. Again, this is one of those things that's considered a fundamental change, so it's not as much as a kind of spike up to an area / retrace, but definitely some movement available there. You also see that there's a New Zealand official bank rate. Again, we can't trade New Zealand on Nadex, not yet. But this is also something, because it's dropping. Again, look for some nighttime movement. Okay, between this and the Aussie and the New Zealand both doing rate cuts. Again, some potential for some nice movement there. On Wednesday, okay, we talked about this. Draghi is speaking in Frankfurt, so there may be some movement associated depending on if his tone changes. Anytime Draghi speaks and he talks about inflation, or again, Brexit, but at this point we're still kind of in a holding pattern. But if he mentions anything about a slowing European economy, there definitely can be some movement with the euro, particularly euro dollar pairs, but also the euro pound. That could be an interesting play for that one as well. Going down again, Chinese news. It's marked here. Obviously, you can trade Chinese news with Nadex as well. That's something that a lot of people kind of forget about. Not necessarily a currency play, so I'm not going to touch on that. But if you guys didn't realize that, you can see that with Nadex as well. Let's see. Go down Thursday. Again, Powell speaking. Powell can be hit or miss. Okay, Powell's one of those hard things that if he has something important to talk about and he releases it, yes, you can have large movement. Unfortunately, most of the time when he's talking, he doesn't say much, or the market already kind of expects it. But with a U.S. trade balance, I think this may come up, especially with hitting more tariffs on people. I think bringing up between the tariff, if the tariff thing is not figured out by Thursday, I guess the new trade tariffs are supposed to go in on Friday, because the movement is not happening fast enough with China. Again, I think trade balance and tariffs is going to pop up. So this number actually may be one to watch. Not the top 3, but something to keep an eye on. Going into Friday, again, you have again, some loan data. And again, this is early morning where we start with the pound. Look at all the pound news, right? One's considered high, the GDP number, but we have a lot of different things: manufacturing, constructions, visible trade balances, other trade balances with non-euro nations. So there's a lot of pound news. There definitely can be some movement based off the pound, and that's why I chose that one for our top release, just because there's so much packed in here. But I definitely think GDP number is important. And again, think about this. They're leaving Brexit, but yet the GDP is going higher. Okay, you would think, hey, listen, you're losing a huge trade partner. What's going on? But it's going higher. So I think that could be important. And then the 830 number rolls in. That's where you see the CAD employment change, unemployment numbers, consumer price index. Again, for non-food and energy, and again, you guys see it rolls across. And then again, everything else kind of rolls in. So definitely a week full of news. It's nice to have one of these. It's pretty refreshing. Looking forward to it. Now let's dive into some of the charts. For those of you that are unfamiliar, it looks like there's a lot going on my charts. And that is true. There is a lot going on, and basically blue is potential areas I'm watching out for. Red and green are typically buying and selling zones, or kind of profit projections. I should probably pick a different green for it. Now, interesting thing on this one is last Monday would have been the 29th. So looking back into last week puts us right here, okay? Right on this green. And we talked about, we had this kind of buying area, right? Price had come down, it bounced off of it, and then we were going to see what it did, if it was going to start to retrace and push lower. And it did. It ended right where we wanted to end, okay? Typically from there, what we're looking for is, typically you look for another bounce, or we look for a break and a retest of that area. Now, obviously with news, Trump, ratcheting up the the tariffs, we had quite a large gap to the downside. So the gap is always interesting because we had two areas that had been rock solid, and we actually gap past both of those. And now what's interesting is now we can play this kind of like our standard Sunday night gap, where we have a gap, we expect price to retrace up to it. Interestingly enough, you can see it gapped actually down into a lower little 30-minute buying zone. Okay, so at this point, what I'm looking to do is play somewhat of a retrace. It's about a 50-pip ride back up again. And again, there's going to be news releases and things like that coming out this morning. This would be something to look out for. There are many different ways to trade this. One being wait till we have confirmation of a break. So a lot of people, and again, if you guys know what support and resistance is, this is one of the biggest support and resistance traps. That's why this price spiked above and then collapsed back down again. Yeah, we had a bit of a retrace before it pushed lower and then finally hit a buying area, and that's where we started to get confirmation of it riding back up again. The entry this one was really down in this area, in this 77.17. The reason why you see price spike and immediately push is because I put a line right here. Okay, this is a support and resistance trade. People are like, oh, there's the gap, there's resistance, it turned around, I'm gonna buy because it went long, and then immediately collapsed back down. Well, it did that to trap all those people, so they're negative, right? And now it's kind of inching across. So we'll see if it can break. If we can get some type of a confirmation pattern above 77.60, look to potentially take this 40, 50 pips or two Nadex strikes to the upside, okay? That's kind of what I'm looking for on this one. Right now, besides that, what I'd be looking for is kind of the nighttime trades. I'd like to see what this does during the day when U.S. traders get in. Remember, we do have that news release tonight. I would definitely be prepared for that news release tonight and kind of see what the markets are showing us. If it flat lines from now till then, make sure you mark off the bottom and the top. Mark off this gap, basically the 78 area as a potential spike on this one. Or typically with lowering rates weakens it. So again, we may be pushing back down and heading back down towards this 75-ish range. I don't think it's going to jump in one day, but again, we are basically clear to the downside. If we start to push down, there's not a whole lot stopping us here, okay? Going down to the Aussie dollar. Again, last week I made this comment that this is the little brother, and some people laughed and some people didn't quite get it. This one has given us kind of what we were looking for, right? We had been in this blue area where the start and kind of the base of this kind of channeling happened. We hit it, we went higher like we expected. Here was where we were last week, and we said we were going to see what happens. And we said one of two things was going to happen. We were going to start to break higher, in which case we were going to test high, and again, there was the blue box. Or number two, we would push back down, we would push back up, and then we would start this kind of downward push. And we've actually started the downward push slightly, although, as you guys can see, it kind of went down, it pushed higher, based, and then we had the gap. The gap is running into a sell zone, very similar pattern. You'll see the same situation here. It spiked up over, snagged the support and resistance traders, and has now kind of pulled back, stopped them out, and is baselined. So similar pattern. Let's see what happened when U.S. traders kind of get into the market here. One difference with this one is you have 2-hour binaries, okay? We don't have 2-hour binaries listed for the Aussie yen, but we do have them for the Aussie dollar. So in this case, if you start to see some US movement, you start to get a confirmation higher, this is an opportunity that you have to take 2-hour binaries, which are smaller. When I say smaller, I mean that the strike differential is different. You guys are unfamiliar with 2-hour binaries. 2-hour binaries in the Aussie dollar are only 4 pips apart, okay? The difference is in one of the daily prices, it's 20. Okay, so you have to do basically one, much smaller amount, right, of movement up inside of a 2-hour window. And a lot of this is going to be driven by the morning news. So there's some, again, there's some nice potential to be able to grab some nice movement this morning here, okay? Or potentially if it starts to fold back over again, that may be the push down into this larger daily. So just keep an eye on this one. Again, we got to get out of the sideways spacing. US traders will be the catalyst for that, all right? Now, dropping down into the next pair, okay, this is the Euro Yen. Euro Yen, last week we were here, and we talked about we had breached this 86.50. We pulled back up again, and what we were looking for was a target down here, and we got really, really close. The low this morning was at 84.88, and basically 84.80 was kind of the opposite end of the channel. And again, anytime you see any type of gap like that, you would have had to take yourself out early if you had been paying attention to it. Really, after Friday, we were so close to it Friday, it would have been safe to take yourself out early in any position here. We are bouncing off of a buy area, and this buy area has been established by Brexit. okay? This is the Brexit back and forth kind of tennis match, and then we kind of baseline why we didn't hear anything. And then we started to get some news, and finally we started to kind of push back to the downside. So we are in somewhat of a buying area, although price has moved away from it quite a bit at this point. We are up already about 63, right? It's driving back up, and I'm actually looking for price to come back up in this 85, 70 area. You guys will see it. It also coincides with where we have this kind of drop, sideways, and then large push down. So I'd like price to run up in here, and then I'd start to look, start looking for some shorts. Remember, there is some news this week for the pound, which again, Friday is a big pound day. If you drop, your analysis down into the kind of medium impact, you have some pound news starting as early as tomorrow. Okay, you have two different people speaking for the pound, as well as with Draghi speaking on Wednesday. There's a lot of opportunity for this to kind of start pushing, start basing for some shorts. Like I said, any euro weakness in this pair will send this down. Any pound strength in this pair will send this up. Will also send this down. So a lot of things, have us kind of aiming to the downside based off of what the forecasts look like. Any of those misses will send this obviously up in the air. Again, keep this 86.50 marked on your charts as the upper side of the channel. We've kind of bounced around this bottom zone enough. I'm actually ready for it to break. And if it does break, I'm looking for a retest up before I go short. But at this point, again, we're grinding higher, waiting for some news releases to happen. But again, for me, really 85.70 is an area that I'm looking at. Actually 85.65 where this single wick is right here, which also will coincide with what you guys see here. And this is a 30-minute chart on the upper right-hand corner. So mark off this zone right here, depending on the charting software that you're looking for. I'm looking for potential shorts when we get up into somewhat of this area, okay? Now dropping down to the euro yen. So euro yen was also in a similar situation as the two Aussie pairs. If we look from where we were last week, we were right here. We had pushed back up. We were actually in a small selling zone. Okay, you guys can see that we came and this was the trade. We had marked off this. It had hit it. It went down, and it based back to the bottom side of the channel. It had already moved about 70 pips. So on Friday, most likely you would have cleared this off just in case there was any news over the weekend. In this case, the news was obviously straight down. This one is making a valid attempt. It is giving us confirmation signals that it wants to go higher and probably retrace back up. It's only got about 30 pips to go to the top side, so I would not jump into it at this point. The jump back in was probably back down in this area right here, which would give you'd be up about 40 pips at this point. What I am looking for in this one, because we're in a downtrend, we had the impulse correction, impulse correction, impulse correction, and then the impulse move. And again, the colors are going to get skewed slightly because of the gap. If we get back up into this 124.40 area, I'm going to start looking for confirmations on my lower time frames. Nice little basing here. Again, this kind of came up because it blew through. It got rid of all the orders here. So I'm looking for new established shorts somewhere in this range. Like I said, I'm going to look once price gets here. I have this green bar right. I'm going to put it right here at 124.30. And I'm going to use this as an alert. If it breaks through that alert, I'm going to come back to the charts. And again, remember I said use technology. You don't have to sit here and watch it. It's like watching paint dry over here. When it comes up, I'll get alerted by an email. I will come back to the computer, and what I'm going to start looking is on the lower time frames. I'll drop down to the 30, probably the 30, 10, and 5, and look at those real quick. Start looking for confirmations. If I can find a confirmation or a setup with small risk, start looking for somewhat of a retrace back to the downside to continue the trend. Okay. Now understand, if you guys were to draw kind of somewhat of a sideways channel in this one, I'll just put a line. You'll notice that this has been a big area, right? Here, it kind of held. This has been a big popular area, right? Hit here, didn't make it, got close, went back, and we hit it, and then we pushed away from it. So 123.50, if you don't have that marked off on the daily, again, another zone that you need to mark off, particularly because we have this sitting below it. There's not a lot of chatter, so this can definitely be pushed back down to the 118 range. So this is more of a longer term swing trade. This could be a weekly, somewhat of a weekly position if we can start to get that push. All right. All right, I jump into the next pair. Oops, I moved the window around. Sorry about that one. Right there. Okay. All right, so we did another draw. We missed it just slightly last week. Here is where we were last week. We had started to pull back up again. Now, this one's had some interesting. Now, again, a lot of things on this one. This is like a prior zone. I'll remove it now from you guys. So you guys, it's for a different group. where we are now, this one did not have the big movement. Again, you guys can see it was a green and then a gap lower, and it just moved back up again. This one does not have the large gap like the other pairs did, the other yen-based pairs. So kind of an interesting situation. We have mixed signals or conflicting signals right now. We have a downtrend set up, even though it's basically just two greens. Again, if that green pushes a little bit higher, get a bit of an anchor break, right? We've had some established support down here, right? You can see on the chart here, price went up, pushed down, and immediately pushed back sideways. So this one, even though the European traders have been there for a few hours, we're not really seeing the movement. We're seeing a bit of a retrace, right, off the gap. You know, we had one gap, came back up, and this is where it ended, right? So not really much movement. This one didn't have the explosiveness. For me, I don't love this one as much right now. This is something, because the European traders have not come in with any power, this would be one to watch out for news releases today and tomorrow. They just haven't made their mind what they want to do with the dollar. I think people are really concerned about the European Union, particularly with their strength and a coming recession. So I think that's why we have weakness here. So nothing that I love for the week right now. Going into the pound yen is definitely something that I am following. These are moves from last week. Okay, so if you remember from last week, let me drag this out, bring it back down. So we had pushed right here. We had pushed all the way back down to this buying area, and we said one of the things that we were looking at was if we were able to break below this zone, these were two targets. So it didn't. We ended up, again, we held the buying zone from the Brexit trade, right? This was the backstop for Brexit, and it continued to push. That was a retrace. So price was able to push all the way back up to here, about 75% of the way, before a little bit of a gap. So I believe if we had not had the kind of tariff message, I believe we would have pushed just slightly higher, although we were in the kind of lower consolidated area. Now, where we are now is the big question, okay? So you can see this. We were starting to see this cliff. This is something that we were actually talking about on Thursday. And then, boom, back down to this lower area. So where we are, we're kind of smack in the middle. We're about 40% of the way through this two brackets. For me, although we had this large run up, I'm not necessarily too confident that we're gonna retrace it all the way back up. This gap here coming through in the middle, this is a very, very strange pattern. It's not one that you really see often. Typically, when you have somewhat of a gap, it'll go back down into much lower zones, not kind of pick a spot in the middle, then gap again, then flip, and then turn. Again, this is where you kind of expected it, right? Oops, hit the wrong button, sorry. This is where you expect the gap to occur, and that's kind of where it's sitting right now. Until this kind of forms a direction, top or bottom, I'm not really focused on this one. So, again, right at the bottom, I'm still looking at it on the daily. I'm probably holding off and waiting for these to approach these two different trades down here. I just don't have a lot of confidence that this is going to go much higher. The way that I'm looking at this one is I'm looking at this is going to be a big stumbling block right here. I'm looking at this is going to be another stumbling block to the top side. So there's a lot of things to the top side that are kind of worrying me right now, but it's been unable. And again, the lows are getting a little bit higher here. So it needs to break this zone before I'm willing to kind of make an assessment up or down. So as exciting as later in the week is, right now this one is not that exciting. Okay, pound dollar. Okay, pound dollar had a similar pattern, right? We had bounced off these lower two sell zones. We pushed back up again. It does say that we're an uptrend setup, but it's not really an uptrend setup because, again, excuse me, we have the gap. You guys can see this one is a little bit more clean, where the last one we had that big push up and then a gap kind of in the middle to go down. This one is still in its reversal pattern, okay? This is a very large extended range candle. For those of you that are not watching, this is a 160 pip candle in a 4-hour chart, okay? The daily ATR on this one is only 89.6, so it's 90. So this one almost did double in 1 4-hour window. When we see large pops like that, we are looking for retraces, okay? Now, the gap over here kind of made it a little bit funky trying to get a good entry into it, but what we've been doing is we've been looking for a retrace to the downside. Now, it's a shame that it happened so late in the week because this is what we've been looking, and we're about, about 56 pips into it already. Now, the other thing that makes this one interesting is the fact that this is one of the touch bracket pairs. So had we gotten into this a bit sooner, there has been an opportunity for this touch bracket this one to the downside. Again, if you guys have heard me say in previous weeks, if you're not trading touch brackets, go in there in demo mode and start messing around with them, okay? The people that have taken the time to do it have been sending me messages and saying they love touch brackets. These are great. They like them a lot. Get in there and try it for yourself, okay? I'm not going to do a training. I don't have time to do it today, but get in there and try them, okay? The touch brackets. This has been a great one. Again, large movement. This is a touch bracket trade, okay? This is one you've also been able to put some spreads on, but for me, this has been a nice little weekly trade. This one, right, even where it is right now, for me personally, I think, and again, this is not a trade recommendation, but me personally, I'm looking for this to continue back to the downside. I think it is going to retrace back to the start of the news, back down to the 130 area. And again, this would be pound weakness, preparing basically to, go into the week at the end of the week strong. And I think that's what we could see because, again, any strong U.S. news, again, we'll push this back down again. So there could be weekly trades in here. This is plenty of movement still available to go back to the downside. You got about 80 pips. You're talking about 4 strikes worth of movement to the downside. So there's a few different potential strategies to trade that one. Next, dollar CAD. As I mentioned, dollar CAD is going to be strong later in the week. Not strong as in a pair is going straight up. Strong as in there's a lot of movement potential. As you can see on this one, this has been kind of our area that we've been looking for. We're using this as our trigger, this 134.46 to get back to it. You can see based off of last week, wait, where were we? Right here, okay? We talked about, again, we had bounced off this area. We'd come and retested. We were looking for shorts, and that's exactly what happened. Price ended up collapsing lower than what we thought and then bounced back up again. And then again, the 4-hour kind of sideways chart is what we were looking for. Little 50 pip zone right here that we're able to grab. Now, again, this we're not going to be able to there's no way to predict this type of movement. In this one, though, I do like where it went to. This one did gap back up. It is channeling towards the upper side of this bracket. Any dollar weakness or any CAD strength whatsoever, again, that's going to start pushing us back down again. I'm looking at most likely duplicating the same thing before. Again, not trade recommendation, but that's kind of where I'm leaning towards because we're in the upper side of the channel on the daily as well as the 4-hour. So having those two combinations is something that I enjoy. Again, larger time frame, intermediate time frame, downtrend setup on the lowest time frame. So crazy gap. But again, nothing I can do about crazy gaps, but I'm looking for this more to go towards the downside. All right. The news on this one, remember, is, let's see, 1:45 p.m. today. The BOC is speaking. So again, that may provide some of the potential to push this to the downside. If they come in here with, again, they had some good news last week. That could be, if they reiterate on that good news, that could be the catalyst to drive us down later on today in a few hours. Going into tomorrow, they have PMI as well. Going into Wednesday, it's just dollar news, which is not big. Going into Thursday, we have trade balance. Trade balance does matter for CAD. So that's 8:30 on Thursday, as well as then Friday morning, 8:30 unemployment change. So a bunch of CAD news this week. This is the pair you should be looking at. I do expect some bounces back and forth, and that's, again, if you haven't marked that off, the channels are 134.80 to 134.98, and then 134.30 to 134.15, about 15 on both sides, okay? Going down into dollar Swiss. Dollar Swiss is not really my favorite pair. Now, interesting thing about dollar Swiss is you would think anytime there's any type of geopolitical news, and this one typically moves when anybody mentions war or anything angry on a political, geopolitical scale, this one moves. This one does not have the incredibly large gaps like the other pairs do, which is kind of funky, right? Normally that's where you'll see it. You are seeing it come back up and fill the gap here. Okay, it did touch the bottom of this gapping candle and is now giving us somewhat of a kind of signal to go back to the downside to retrace. I'm still waiting for this to kind of turn. We've seen that it's been a very slow. Last week there was the bottles of these candles were less than 15, so very boring. Hard thing to trade, hard thing to watch. But it looks like we are starting to get somewhat of a push to the downside here. A bit of a retrace, not surprised, but we'll see if this kind of pushes and continues to push back down to the parity level. That's a trade that it's more of a longer term weekly trade. It's a slower, more kind of swing position type trade. So not necessarily, potentially, not the best for Nadex, okay? Last but not least, dollar yen. So dollar yen is interesting in the fact that we were already kind of pushing back down again. We were at the bottom. We had kind of this green zone here. We had talked last week. Right here where my cursor is right now is where we were. I said if we get any type of confirmation to the downside, this green box, okay, is what we were looking to take. This is where we were last week here, right here. We said we pushed up, and if we got any type of close in the entry of this box, we were going short. And it did. It went down. Our target was actually here. So Friday, you would have to make that determination whether or not you were taking it or not. You were inside of a buying zone here, and then it just got past. Okay, so again, Nadex, we can't hold anything over the weekend. You would have definitely had to make sure that you were out. Had you been trading this and anything else, you would have had to make that determination. So where we are now, price dropped back down. This is kind of a garbage zone. It went down, it went up, and it retraced and is now kind of in that zone. And you'll see both on the 4-hour as well as the 30-minute, it's kind of butting up to the same area, this 110.85 area. And you guys will see, obviously, lower highs. It's forming a really decent channel at the top. It hasn't really broken into here whatsoever. So this is technically a sell zone for us, right? It pulled back up, and again, it's kind of shifting into a sideways pattern. The stock market futures were obviously beat up pretty good, and we'll have to see how they react this morning, and that's going to dictate where this pair goes. I don't think we're going to get as much movement until the stock market opens. But the big question is going to be, how does the stock market react today? Is it going to snowball and continue to get worse? Is the worst in and now people are going to rally behind it and will go higher? Those are things I don't necessarily know, and that I think is what's going to drive this pair. I'm really hesitant to start taking this long because we have a sell zone here, and then after the sell zone, we only have about 12 pips before we run into a gap, right? This is a gap area. Typically, the initiation of the gap is a sell or a buy zone, so not tons of movement to the top side, and that's what kind of worries me. Even on the 4-hour, you're looking over here, if it can breach this zone at 110, actually that's just up to here. So I mean, you're really, even on the 4-hour, you're only talking about 20 pips movement. So not the biggest mover. This pair has really kind of gotten, smaller and smaller in its ranges. I think there's better opportunities right now in some of the Aussie pairs, and that's what I'd be looking for today. Later in the week, I think this one will be better once we reestablish some zones. We'll see where it equalizes after the U.S. market opens today. All right. So with that being said, guys, I am going to roll out. One thing I want you guys to focus on too, make sure you guys pull up this news today. I think the news is going to be important. I think the news is going to drive a lot. There is news at basically the FOMC. Warren Williams is speaking at 10 a.m. this morning. That should be interesting. He's probably going to mention the trade tariffs. I'm sure he will because it's such big news. 1:45 Canada is speaking today, and then tonight, make sure you log in 9:30 p.m. Eastern time. Get on that Aussie retail sales. That's definitely going to be a nice one. All right. If you guys have any questions for me, you guys can shoot messages to me across at support at Major League Forex. You can go to our website as well. If you guys are familiar with what Discord is, it's a chat program. You guys can go down and click this button right here that says Discord and be connected to it, or you can message me on Discord. MLFX Bryan, number 1495. That's how you message people over there, and you can bounce questions off me if you like. All right. Thank you guys so much for joining. I hope to see you all next week. Hopefully this week we have just as much movement with news releases as we did last week. I'm very excited going into it. Trade well, trade smart, and have a good week, guys. Take care.